Hello, and once again, welcome to the latest episode of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments to more predictable pro-entrepreneurship, pro-growth jurisdictions. Today, I'm reviewing a recent report by Niccolo Conti, writing for Visual Capitalist, entitled Mapped: the states Americans are fleeing and moving to, referring again to the ongoing mass migration of business owners and their families to sunnier climes and greener pastures. I will then conclude by explaining how small and medium sized business owners can utilize state and federal law to their advantage to relocate out of their existing state to a new state while keeping their existing federal employer identification number, contracts, and bank accounts intact. But first, a brief introduction. My name is Chad Daniel Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 12 professional licenses and certifications spanning accounting, tax, audit, financial planning, and of course, the law. My firm website is www.cummings.law. The U.S. Census Bureau released domestic migration data for calendar year 2025, and the results will not surprise you if you have been watching this podcast. California lost 229,100 residents to other states. Remember, by the way, these numbers are net. So this already accounts for people moving into states and people moving out of states. This is the bottom line change. New York lost 137,600. Illinois, the land of Lincoln, lost 40,000. New Jersey lost 37,400. The Commonwealth of Massachusetts lost 33,000. Those 5 states account for a combined net outflow of 477,400 people in a single year. Visual Capitalist mapped the data, and the map tells a story that the numbers alone do not. The country is sorting itself by tax policy, and the sort is accelerating. Compare the losing states to their tax foundation rankings, which we have covered at great length in earlier presentations. California ranks in position at number 48. New York ranks in position number 50, almost, well, not almost dead last, actually dead last, position number 50. Illinois ranks in the bottom at position number 38. New Jersey ranks in position number 49. Massachusetts is in 43rd place. The 5 states with the largest domestic outflows include 4 of the 6 worst ranked states in the country for tax competitiveness. The 5th, Illinois, ranks in the bottom quarter and is actively pursuing a constitutional amendment to increase its income tax rate, which we expect will be reflected in the next State Tax Competitiveness Index edition. Now, the gaining states. North Carolina led the nation with 84,100 net domestic arrivals, the first time it has finished first. Texas, not surprisingly, gained 67,300. South Carolina gained 66,600. Tennessee gained 42,400. Arizona gained 31,100. Georgia, 27,300. Alabama, 23,400. And Florida gained 22,500. Every one of these states either imposes no individual income tax, like Florida, like Texas, or has enacted rate reductions in recent years. For example, Texas ranks in position number 7 on the Tax Foundation Index. Tennessee is in 8th place. Florida is in 5th place. North Carolina is in 13th place and on a path to eliminate its corporate income tax by the year 2030. Now, Florida's gain of 22,500 might seem low, But remember, Florida already experienced massive in-migration during COVID-19. And the visual capitalist analysis attributes this relative cool down to property taxes, home insurance cost, and higher housing prices than in Sunbelt markets that attracted the initial wave. That is a real factor, don't get me wrong, but it does not change the direction. Florida is still gaining. Texas is still gaining. California is hemorrhaging people, 229,000 last year alone. The rate of California's loss is, by every metric we have been able to identify publicly and through our own private investigation, that number is not changing. The rate, if anything, is increasing and accelerating. Now, the data measure bodies, not dollars. For dollars, we need to turn to the Federal Internal Revenue Service migration data, which is published separately and which measures adjusted gross income. By that metric, Florida gained $21 billion in adjusted gross income. That's a fancy phrase for tax base from interstate moves in 2023, which, by the way, is the most recent year for which we have solid data. And in that same year, California lost $12 billion of tax base. People leaving California and New York and New Jersey and Maryland, to name a few, are not low-income residents seeking cheaper housing. Quite the opposite. They are high-income taxpayers whose departures remove income tax revenue, capital gains tax revenue, sales and property tax revenue, and economic activity from the states they are evacuating. The Midwest region showed gains for the first time in years. Ohio gained almost 12,000. Indiana added 12,200. Visual Capitalist attributes this to the affordability advantages as Sunbelt housing costs rise. For households priced out of Florida or Texas, the Midwest offers lower housing costs and growing employment with certain trade-offs, those namely being higher taxes and, frankly, less favorable weather. But those gains are real, do not get me wrong. They are also small relative to Sunbelt inflows and do not offset the outflows from high tax states in the same region. Illinois, one state south of Wisconsin, lost 40,000 residents, while Wisconsin gained 7,000. The net regional effect is still negative, however. To briefly recapitulate, California lost almost 230,000 residents in 1 year, and we expect the number will be higher for 2026, though we will not have those data for some time to come. In that same period, New York lost nearly 140,000 residents, again on a net basis. The 5 worst states for outmigration are 5 of the worst states for tax competitiveness. Correlation does not imply causation, but causation always implies correlation. The 5 best states for inflows are states with no or very low income tax rates. Florida and Texas specifically impose no state-level personal income tax, and most small and medium-sized businesses in Florida and Texas particularly pay no business income tax. The Census Bureau count of the people, the IRS count of the money. Both counts point in the same direction. Now, with this context in mind, redomestication is the lesser-known legal process of transferring a company's legal state of domicile, which is different than your personal residency, by the way, to a new state without dissolving it, without creating a new entity, and without triggering federal income tax consequences, but only when performed with the strict formalities imposed by the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both the destination and departing states. When performed by a competent professional, the company will retain its existing federal employer identification number, contracts, credit history, and bank accounts. That is to say, there is zero operational or financial disruption, but only if you get it right the first time. That is why it is absolutely imperative to work with a qualified, experienced professional and save the DIY for home improvement. I have successfully completed redomestications from all 50 states and for limited liability companies, partnerships, subchapter S corporations, and subchapter C corporations. So if someone is telling you it cannot be done, what they are really telling you is they don't know how to do it and they can't be bothered to learn. Now, foreign entity registration is not the same thing as redomestication. Do not allow yourself to be confused or become mired in terminology. Foreign entity registration, also referred to as foreign qualification, does not change the company's domicile. In fact, it does the opposite by keeping the entity in the former state indefinitely and merely adding another layer of tax and compliance obligations in the destination jurisdiction, thereby leaving you anchored to that state you thought you were leaving. Meanwhile, a traditional merger, which is also still not the same thing as redomestication, creates a new distinct entity in the destination state, may and often does require the issuance of a new federal employer identification number, and can trigger serious tax consequences, particularly when performed by an amateur. Finally, dissolution should not enter the conversation at all because dissolution terminates the company. Dissolution is a going out of business maneuver, not a relocation mechanism. Dissolution is often a taxable event, and when performed incorrectly, as it often is, can expose the owners of the company to unlimited personal, yes, you heard me correctly, personal, joint and several liability for the company's liabilities, known and unknown. That is because the so-called veil of liability protection no longer exists because the company no longer exists because you dissolved it. If you think dissolution is a cost-saving mechanism, you are in for a rude awakening. I'm sorry to be the bearer of bad news. And if you have a so-called professional suggesting dissolution as a relocation stratagem, please seek better advice before you make a very expensive mistake. Redomestication, when paired with the change of personal residency and that is an important and, a reduction or outright cessation of business operations in the former state, can reduce or even eliminate state tax exposure there for the entity and its owners. Don't take my word for it, ask your CPA. Now is the time to consider acting before the various state legislatures consider changes to their respective laws to hinder or even eliminate the avenue of redomestication. If you have questions regarding potentially redomesticating your LLC or corporation to a new state, please utilize the link in the description or in the bio for more information on this process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Daniel Cummings of the firm Cummings & Cummings Law. And I hope that you found this information helpful. As always, this information in this presentation, like all of my presentations, is necessarily general in nature and is not legal or tax advice, nor should it be construed as such, because that advice definitionally must be specific to a particular set of facts and circumstances. So if you should have any questions whatsoever regarding this information or the content of any of my many earlier presentations on this topic, please visit my firm website at www.cummings.law, not .com, but .law to schedule time for a consultation. I look forward to that opportunity to speak and perhaps even work with you very soon.